Is 4,000 the bottom for gold? Let's find out with Gary Wagner, editor of thegoldforecast.com. We're speaking on Tuesday, July 14th, on the back of a lower than expected CPI print, and we'll get to that in just a minute. What will the Fed do with this new data? How will gold react to interest rates, the Fed, and the future of inflation? Welcome back to the show, Gary. Good to see you.
Thank you. It's great to be back in exciting times, but it's almost always something that we've got to look at, figure out with the movement in any asset, and gold is no exception. So interesting times, and I agree with you. I think that we have, at least on a tentative basis, formed a bottom or a definitive level of support at around 4,000. We'll get into detail when we look at some charts.
The actual headline CPI was 3.5%. That came out earlier today. 3.8 was the expectation. So the markets were already expecting lower CPI than 4.2, which was the previous month, but 3.5 came in much lower than expected. This is important because with the cooler than expected inflation print, potentially we're looking at fewer rate hikes later this year. Markets rallied today on the back of lower than expected inflation data. The S&P is up. NASDAQ is up. Gold spiked 1.4%, which for gold on a single intraday basis is quite significant. Yesterday, you and I talked offline. Yesterday, gold was down, and today seemed to have regained most of its losses, if not all of its losses yesterday. Bitcoin is also up 3.5%. So risk on day today. Your
Absolutely.
Outlook on inflation, is this, you were looking at oil as well. You were telling me oil is starting to tick back up. And of course, the inflation data we saw is reflective of last month's economic data. I wonder if the reignition of tensions in the Iran war, the Strait of Hormuz being closed once more, and oil starting to tick back up. I wonder if this 3.5% CPI is a short-lived reprieve from inflation, or do you see any evidence to suggest that inflation is going to be lower for longer?
Well, right now, as long as crude oil is firm, we want to look at the dollar and other assets, but crude oil has been a primary factor because in a petroleum-based society, that affects everything across the board. And so obviously, the markets are going to be sensitive to an uptick in crude. If time permits, we'll take a quick look at a crude chart. And that's definitely been ticking up after forming a bottom about a week ago.
Are you concerned at all about the tensions in Iran reigniting and whether or not that's going to mean higher interest rates?
Absolutely. I'm concerned and laser focused about any activity between the U.S. and Iran right now, because that is still a tinderbox. I mean, if you think about it, we had a truce that lasted a very short period of time, and now it's kind of in between a truce and not a truce, but both sides have been doing military activity and hitting targets, and that ratchets up that uncertainty factor about geopolitical stability, and that, of course, can affect gold in a bullish manner, taking it higher. And that's what we're seeing today. Today is reacting mostly on the inflation news, but I believe always in the back of all of these traders' minds is what is going on in Iran.
All right, Gary, let's take a look at what is moving gold. So yesterday, I mentioned yesterday, gold went down considerably, touching the critical resistance level or support rather of $4,000. And today we're seeing gold rebound up to 40.62 is the latest price on my screen, Gary. Is 4,000 the floor for you?
Well, I think there's more and more data suggesting that. Did you want me to pull up a chart so we can look at that?
Yeah, please. Let's take a look at the keys. Yeah, key levels.
Okay, so let's go ahead and blow this up, and then we'll condense it. But you've got a series of wicks. This is set right at about 4,039.98. You've got a couple of wicks here, and here, but the real bodies, which is the differential between the open and closing price, Of course, on a candlestick chart, if it is an up day, meaning it closes above the opening, that's a green candle. The red candles is where it opens at the top of the rectangle and closes at the bottom. You also see very little activity recently of wicks. Today's wick the low came in, it looks like right around 39.90, but the real bodies, meaning this is current, because that's the top of the green candle. It opened right around 4,000, just above it. The open today was $4,005. It did make a low, but recovered very quickly. So that to me is pretty bullish. Now, if we take that and we move this back so that we can see, well, what was the last time that gold traded to this area? And what I noticed is that bottom matches here. And that's not really a significant bottom, whereas here, which is at about 4,084, that is a significant bottom, which is why I will peg resistance based on the action that came back in October 2025 as a potential level. And that's why I've got that red line there to represent resistance. And these series of candles that came in which the real body, meaning the open and closing price, the wicks are going to be the extreme highs and lows. But if it doesn't close near the high, of course, that can come down. But it's a decent sized candle. Yesterday, we had $100 sell off. Today, we've got about a $55 gain. But the significance is the fact that we are forming this base. Be it short-lived, we don't have a ton of data right here, but this market has come down when you consider it from over 5,600, a series of lower highs, and then a series of lower lows till we hit this platform. And here we can make a case for either tower bottoms or tweezer bottoms, meaning you've got the last 2 days had a low that is significantly close to the lows of the low that first came in, which occurred on June 24th.
One thing I've learned from talking to countless investors over the years is that people spend a lot of time searching for certainty, the perfect signal, the perfect entry point, the perfect moment to act. But markets rarely work that way. In fact, many of the smartest investors I've interviewed weren't successful because they waited for certainty or the perfect entry point. They were successful because they acted when they had conviction. And that's especially true when it comes to something like gold. Many people have followed the gold story for years. They understand the macroeconomic backdrop. They see why central banks continue to accumulate gold, and they understand the concerns surrounding government debt, deficits, and currency debasement. But understanding an investment thesis and actually positioning for it are two very different things. Today, more investors are deciding to take a closer look. Some are purchasing gold directly, others are moving a portion of an IRA or a 401k into a gold IRA. That's why today I partner with Augusta Precious Metals. What I appreciate about Augusta is their commitment to education. They explain how their process works, answer your questions, and help you evaluate whether or not precious metals make sense for your particular set of goals and situations. No pressure, no hard sell, just information so you can make an informed decision. So if you'd like to learn more, visit lintrustsgold.com, link down below in the description, or scan the QR code here, or text LIN, L-I-N, to 35052 to receive Augusta's free information guide. Gary, why is 4,000 significant besides a psychologically round number? Is there a particular technical reason for why it's very hard to break above and below 4,000 right now?
You know what? In the case of gold at 4,000, I really believe it is less technical and more of a psychological landmark. Any of what I call them the century marks, but they're $1,000 apart, whether it's 2,000, 3,000, 4,000. Those are significant areas that if gold, for example, when it was trading under, it broke well above. And when it came back down, the lows came in at about $4,060. It then went up. And this was the first time that gold actually broke below that former level of support based on these series of bottoms here in November of 2025, when we broke down below it. And now it has become an area of resistance. The way I always look at support and resistance is if I look up, I have a ceiling or resistance, and anyone on the second floor looks at the same structure and calls that support. So support and resistance are part and parcel of the same thing. In other words, a break above about $4,080 would represent the potential, if it did it on a closing basis and then started to either trade sideways or higher, that we actually held really $39.90 to $4,000. And now we've broken through resistance. Now, we're not there yet. Obviously, if I blow it up, you can see we're not there yet. We've traded down to this area, but the next target, should gold actually enter a sustained rally that we need to overcome, is at about $4,076, $4,080. And if that occurs, I believe it will, then 4180 to 4190, just based on these two tops here, because when we blow this up, we've had this series of lower highs, lower lows, and it changed when we got this double bottom. And that's the key, because if you think about it, gold was on an extended, accelerated move to the all-time record high above 5,600. And then when it starts to break or correct, and of course, this is a multi-month correction, we got a series of lower highs and a series of lower lows. And that's indicative. I mean, that's the textbook definition of a market in a downtrend: lower highs, lower lows. Uh-huh. So what we need to see for confirmation that this bottom is in place is not that it hasn't broken below that. That's only the first step, is that it can challenge different areas, with the most important one right now occurring roughly at 4180. So, that's about $120 from here. But a break above that would be significant, because our next target, when we look, is about 4,400. It matches up with this top from November. At the same time, when we look at that, it matches up with this top to a less extent, but this is major resistance here. And then, of course, these bottoms that come in where I've got a couple of arrows, that's what we would want to see, is a sustained rally and a move past 4,000. Now we're at 4,000 and change. But the real resistance comes in right here at about 4,380, call it, to 4,400. Not only does it match this top right here, but it matches these bottoms here and here, to a lesser extent here and here. So on a technical basis, those are the real levels. Should gold begin to extend this rally, and one, we need to confirm the correction is over. One day doesn't mean that we're going to see gold move significantly higher, because if you look at it as it came down, it makes this first of a lower low, a low that we haven't seen really since September, end of September 2025. And it comes up here, 4190, and then goes right back down. The significant fact about the way it came back down and moved back up is these series of bottoms of the candlestick. So in this case, it is it opens at the top, closes at the bottom. So it is the closing price. And today it's the open that matches it. And now we need to see it, close above 4106. After that, and these are minor levels, but they are still levels, 4135. And the big level that we want to see, if we're going to truly move from a corrective stage back to a rally mode, is going to be just below 4,200.
Gary, does the amount of time an asset, in this case gold, stay at or above a certain price level dictate the likelihood that it will either retrace that level or consolidate around that level. For example, if you zoom out on this chart here and go back to the view that we had earlier, you'll see that gold has spent the better half of basically all of 2026 above 4,000 and 2 months of 2025 above 4,000. So I would say that it's much more likely that in the future gold will retest 4,000 versus 5,000, above which it's only spent less than 2 months. So the amount of time and or duration at or above a level, does that indicate anything to you?
It indicates, so we're saying that on a tentative basis currently, we have real strong support right around 4,000 based on the double bottom. But the fact is that in terms of time, the first low was made on the 23rd day of June, and this most recent low came in yesterday, 13th of July, and of course, right here on the 14th. So it's significant. The longer we see this level hold, we call that building a base. So when it makes a major move down, so for example, if we take a look, it clips back up here and it does stay there for a while, but it's unsustainable. So you just move into a scenario of high, lower high, lower high, lower high. Same with the lows, low, lower low, lower low, lower low. So we've established that there is good potential. However, as I said, my main area is to look at this, and this is short-term resistance at about 40.90. It is based on this bottom that came in at the end of October 2025. If we break above that, the next real target becomes just below 4,200. But right now, it's critically important, I believe, that after challenging and going near this tentative level of support it held, we just need to see a more sustained move, follow through buying over the next couple of days. In a best case bullish scenario, we would want to see an effective close. And I believe this is the August futures contract, so it's priced a little bit different. I believe the difference between this and spot is about $8 or $10. But a move on a closing basis above, let's say, 41.85, that would be significant, because if it clipped up past here, it's going to come and retest this area, and if it holds, that's one thing. If this rally doesn't have that much steam, we'll see it enter really strong resistance at 41.90, and that's what we want to determine if we see gold continue to move higher, how or if and how it reacts at about 41.80.
Gary, what is the significance of how long the price level stays at a certain level mean? In other words, so we've got $4,000 gold, and gold has been hovering around $4,000 or above 4,000 for all of 2026. It spent 2 months in 2025 above $4,000, but it's only spent 2 months or so above $5,000. And so instinctively, I would look at this history and say to myself, well, if gold ever goes below 4,000, it has a higher chance of retracing 4,000 than 5,000. Does that logic make sense to you? Do you look at the duration of time that an asset like gold stays around a certain price as an indicator of anything?
Absolutely. So, for example, when we look at the sell-off that began above 5,600, these series of lower highs, low, lower, low, lower, low, the fact that it came in on each occasion in which it sold off, we saw a move, for example, on the way down, that was a lower low than the previous low, a lower low, and a lower low. So now what we need to see is if, in fact, we're looking at a significant price level in which the multitude of hedgers, traders, banks, all of those involved in buying or selling gold believe that this level at 4,000 is structurally a good value to accumulate, that's what creates the support level. It's when there are more buyers and sellers, obviously. And the fact of the matter is we had significant levels of lower lows until we got to about 4,000. And now we're seeing an extended period of time in which gold has maintained a level just above that. And now the question becomes, if it is going to move higher. We've got significant resistance at about 41.90. How would it react at that price point? That, of course, is still a couple of less than 200, but over $100 to go. That's the significant area should gold continue to move higher. However, we haven't gotten true confirmation that a bottom is set in, because if you look at how we've seen it in the past, the market would trade to a low and then stay at these new highs for a period before tracking lower. In this case, it was a higher low than the previous low, but that would soon deteriorate as we saw gold move down this channel from effectively, I'm going to just say 5,500 to 4,000. So while today's move is significant, it's only the beginning. There's no confirmation that a bottom is in place. The only thing is we didn't see a lower low, and that's good. But it still has to move up a couple of levels, 4140, with the important one right at around 4,200. So a significant ways away when you look at gold at 60. So we've got to see really $140 move, and then it sustain above that before we can confidently, on a technical basis, say that gold has found a bottom here. We can't identify a bottom as a technician, except with the exception of looking at recent lows or highs that came in that match that. So we have an idea that this is an area of potential support. We don't really get that in gold, because if I go back, really potential support comes in between, call it 49.30 and 49.60. So we're just above that. And so I'm not ready to say, okay, gold has found a base is going to move higher. I really need to see how it reacts if it moves higher and breaks above $4,190.
Okay. It looks like the speed at which gold has gone up is mirrored by the speed at which it has gone down. Any significance there?
Well, that's just how I've got this chart, how far we're looking back, because when we look back, the significant high came in October 2025 at around, call it 43.80. And then this is the significant bottom that comes in around 39.30, 39.40 right in here. And the retest of that level recently is actually above these lows that came in. So all things being equal, this former level of support will become a level of support. And then we want to look at a series of highs that came in, 41.90. If it continues to move higher, 43, and this top at 45. 4,500, if we see gold regain some of the bullish momentum that it had up until it hit this all-time record high, we're going to need to see a move really above 4,200 on a technical basis. Now, granted, that's quite far from where we're at now at 4,060, but that's a significant level, is that we see a higher high than the previous high, because we can see that all the way down during this correction, we had a series of lower highs, and it never deviated from that. Lower high, lower low, lower high, lower low. If we're going to break that cycle, in other words, if this is the correction we're seeing from above 5,600 down to 4,000, so a $1,600 decline per troy ounce, we really cannot say that with any real confidence until we break above 41.80. We will also look at this bottom that comes in, which is right above current pricing at about 4,080, and gold's trading at 4,060, 56 to 60.
If someone were to ask you, well, Gary, is gold in a long-term bull market or a long-term bear market? How would you answer that question?
Well, I mean, right now, it is in a correction. Whether or not that correction is a pivot from the overall bullish demeanor that gold had, or a real correction, in other words, a move from 56 down to 4,000 is significant, but it is an acceptable correction. Let's go ahead and put a fib retracement in here so we can see that. We go from there down to about here. The real level that, the real level that we want to see it take out is at around 4,300. And that's just a 23.6% retracement of this all-time record high to the lows. So we want to see it overcome certain areas. And 4,300 is what it's coming at as the first level. So even though we have minor resistance at, call it 4,200, that is obviously what gold would need to take out if it's forming a base and moving higher. But we really want to see if it can challenge this former lower high back then, because then what we get is a series of lower highs, lower lows, forms a base, or I'll call it tower bottoms, but it's an area in which gold has tested 4,000 on multiple occasions and either stayed above it, never broke below this key area that we're labeling as support. We'd want to see it go above 4,200. But the real test, if it's going to get bullish, is we want to start seeing a series of higher highs rather than lower highs, as we saw here. All the way up, you had higher highs.
Okay, finally, the prior history of gold falling from its tops in 2011 and 1980. Would that serve as a useful guidepost as to how much gold should fall in this bull cycle at all?
You know, I was looking at that the other day, but it's all really contingent on what's driving gold higher or lower. So if you look back at October 2011, this was that peak that came in at 1,900. At that point, a new all-time record high. Then it traded between 1,900 and about 1,500 until it broke. And then when it broke, it went down to about 1,020. Here it's showing it at roughly 1,085, but the bottom came in right here at 1,044. And I remember this time well because it was in February of 2016 that we got our first reports that George Soros was heavily accumulating gold. Some of the major players in there were buying, and that did turn out to be the bottom. It was a long road, but it topped out at a certain area. 2,000 was definitely resistance. And then this final higher low, which came in at around $1,850. And look at the tack of the spike. In other words, the rallies here were subtle. It took time to move higher. Here we had a huge spike from 1,800 virtually to about 3,400. It had resistance here, but when it broke above that, we had significant periods of higher highs, higher highs, higher highs, until it hit the apex, which is the all-time record high. So we haven't seen it actually do anything but form a series of lower lows up until now, and I'm only referencing from the all-time record high to current pricing and this prolonged time period in which it seems to find tentative support at around $4,000.
Okay, excellent. Thank you very much, Gary. Ultimately, then, your conclusion from the technical analysis we've done today, how would you be trading the current environment?
Well, it's certainly not time to continue to be bearish and look to just want to move this and look to continue selling. I think that the fact that it formed a base here, it's going to try to challenge a new level on the upside, with the major area being at around 4190. And the fact that's about 130 from current pricing. So short term, I would look for gold to continue to track higher. If in fact we're correct, and it does, I would look at $4,190 as an area where there is potential resistance. So if it clips up as we saw on the way down, it trades about 4,050, and then it tracks to a series of higher highs, a series of higher closes until this red candle. It opened right at the same point, but then it closed lower. And that's when we saw the significant final leg, I'll call it, of the correction, because recently, meaning in terms of time, from about the last week in June to current pricing, it has formed a significant bottom. This is only one day. If we see further selling pressure, it could easily go and challenge 4,000, 39.60, and then about 39.35. However, if we see multiple higher highs from this level moving forward, this would be the target we would want to see gold track to before being able to, with any confidence, say that this long extended correction is over. Mm-hmm. And the other thing is that when you look at these bottoms here, time has gone by, but then time went by back in May, in which we saw it come down and then start to get a series of real bodies, with the exception of this one, that were above 4,400. But when it broke through that price point on the 5th of June, it did so with a vengeance. First to this low here, I'll go by the wicks. So the low was about 4,060, then a lower high, then a lower low, lower high, and our current low that came in yesterday. So would I be an excited bullish player? No. There's a potential for the bearish momentum to continue, but there is an opportunity, and I believe it's because, one, we see some activity roughly in this area that could be significant support. In other words, if it continued to fall, I don't see gold going below 39.20. I think that this set of bottoms would be where we have really strong support, and we could see it move higher, but we need to see it break above 41.90 before we can say with any confidence on a technical basis gold has finished its correction and moved back into a bullish demeanor in which we'll see a series of higher highs and higher lows.
Great. Thank you so much, Gary. Appreciate your time. Tell us where we can find your work.
Well, thanks so much. You can always find us at thegoldforecast.com, on our YouTube channel, as well as our dedicated website, thegoldforecast.com. We offer all of the articles that we do and the videos on a delayed basis that we put onto the site, where those interested can check out what I've said in recent weeks and get an idea. If you think it's something that would be of real value to get my real-time daily analysis, our premium account. And the main thing is, does it give you value? And you can determine that without investing in our site by just looking at it, seeing what we're doing, and you'll get a real sense of whether or not the information we provide is going to provide you, the trader or investor, with value. If you can't make money off of it, we don't think you should be, it's not something you should consider. But if you do see value, at least consider it. But thegoldforecast.com.
All right. Thank you so much, Gary. We'll put the links down below, so make sure to follow Gary there. See you next time, Gary. Take care for now.
Thanks so much for having me. Have a great day.
Thank you for watching. Don't forget to like and subscribe.